26 years of CNBC-TV18.
Well, Titan has been a massive wealth multiplier over the years, delivering consistent growth over time. Mangalam caught up with Ajoy Chawla, the CEO of Titan Jewellery business, to discuss the company's growth strategy going ahead, the impact from higher gold prices, and much more. Let's listen in.
Whether it was Mr. Desai, who founded the company, or Bhaskar, who led it for so many years, and in the last 6 years, Venkat has led it. So a large part of it is really being the custodian of an organization, or as Bhaskar used to call it, an institution called Titan, and ensuring that we stay the course of excellence and stay the course of performance.
From a performance standpoint, let's talk about that. First half of this year, revenue 18% growth. You've seen margins around that 11-12% mark in the jewellery business. Second half, seasonally a lot stronger. What is your anticipation of how this year ends and thereafter the target for the next year?
So how the year ends is very difficult to predict because every quarter, every month tends to be volatile. I think quarter three has begun pretty well. We had a very good festive season, and November also has been pretty good. So far, so good. I think we'll stay with whatever I had shared in the investor call, which was in early November, to say that we should hopefully, by the time we get to December end, we should hopefully be better than our first half results in terms of top line growth. We should certainly see a YTD December growth, which is higher than what we saw in the first half.
You said that the third quarter was good for you. The first 9 months of this year, your growth will be a lot better than the first half of this year, where the revenue grew 18% of the jewellery business. I just wanted to understand a little more on the third quarter performance so far. What kind of growth do you anticipate coming in, and how will that be differentiated between volume and value? Because at one point, gold prices were surging, thereafter they declined, and at every decline, people started purchasing more in the stores. So how did that equation pan out in terms of buyer growth, volume growth, and value growth?
So while I can't share figures because we share that once a quarter with the stock exchange updates, but I can give you a qualitative feel. We did start seeing some amount of buyer growths come up in October and November. I'm not sure whether it was related to gold prices correcting, stabilizing, etc., but we did see a lot of improvement there on buyer growth. Value growth continued to be good, also on the back of higher gold prices. The third piece I would like to share is that exchange. We actually decided to bet on exchange in a big way and actually make it a much larger campaign than we usually do. We are treating it strategically, and that is beginning to show up. So we believe a lot of the volume growth that we saw, when I say volume, I mean buyer, has come on the back of this exchange lever, and that is continuing. Let's see how it progresses forward. This is also the wedding season where exchange is usually good.
The last time we spoke, I asked you about the Zudioization of jewellery. And with higher gold prices, obviously, there is preference for lower caratage, higher studded ratio, etc. So I wanted to understand if that's played out. Because we also spoke with Puneet Chatwal. He said that forget Zudioization. For the hospitality industry, there will be gingerization of the Taj. Now I'm coming to another Tata Group company. What's the, Tanishkaization? How do you do that?
So I think we've experimented a lot with lower carat. Obviously, with gold prices going up, as a jewelry brand, we need to innovate to be able to solve for customer issues. One way to solve for it was for exchange. The other way we are solving for it is by introducing lower caratage jewelry. Our initial pilots have been very good. We are in the process of actually ramping up in a big way. We believe that this is the way to go, because there is no end in sight in terms of where gold prices will go. It's not dependent on us at all. It's dependent on international forces. It's dependent on risk in the world economy. It's dependent on what central banks decide to do. As regards Zudioization, I think our portfolio strategy with Tanishq Mia, Carrot Lane, and Zoya, of course, is working very well. And at the lower end, in the below 1 lakh rupees price point, where I think a large number of new buyers come in, or where a large number of younger buyers also come in, we believe that our portfolio strategy is playing out well. There is a strong presence of all our brands across all the key markets, at least if I can say Tanishq, Mia, and Carrot Lane. If you go to a jewelry high street market, you will find all these brands very strongly present. And in a way, the customer gets a lot more choice. And the price points are competitive. So I think, given the portfolio play, we are seeing a very good opportunity to corner a larger share of new buyers. In gold jewelry, in fact, the pressure on buyer growth, especially in the sub 50,000, continues to be high. And we think that that segment may take a little longer to kind of revive.
What does that do to your margins on the jewelry business? 11 to 11.5% is what you've guided. Do you maintain that? And secondly, competitive intensity. How is that been versus what it was, say, about a year and a half ago, where it was really heating up?
I think competitive intensity continues to be very high. There are enough and more players who are already there, and every player has access to good capital. Therefore, there is a lot of retail expansion taking place across many players, including those which have got newly listed, etc. We, of course, are continuing our aggressive push in terms of retail expansion, and not just expansion, but also, transformation. On the margin side, Mangalam, I would say that given the continuous rise in gold prices, there is always a downward pressure on margins, especially on the studded gross margins, because the relative material composition is changing, and diamonds gives you a higher margin than, let's say, gold. And if the weightage of gold is to diamonds changes, the downward pressure does go up. And therefore, we think we should remain on an annualized basis in the ballpark of that lower range of the 11%. Let's hope.
The eyewear business, everyone's been questioning, what Titan's calculation of the TAM is, whether, it is as big as, say, something like a Lenskart projects, etc. or not. What's your plan of growing that piece of the business? Because suddenly people are looking at ascribing value to the eyewear business of Titan.
Our view of the addressable market on the eyewear business has been in the ballpark of 25 to 30,000 crores. And these are the best estimates we could come up with. We know that there are different views on that front. On eyewear, in terms of growth strategy, I think we have been pursuing a volume-led growth strategy on the one hand. And in fact, our pricing has become sweeter. We have products which are at the entry point. And after a long time, we are beginning to see good volume growths. In terms of the value side of it, from premiumization perspective, there is an entire transformation program underway. So quite a few of those stores have come up and they are doing exceptionally well. So we see this two-pronged strategy actually working well for us. And that would start showing up in both our volume growth and value growth as well. And given the operating leverage in that business, that will then also kick in very well in terms of our EBIT.
A one-word answer on what you would like to focus as the leader of Titan most?
Growth. Growth is our natural aspiration, and it's something that we've been good at. And therefore, and to drive growth, innovation.
Well, that was the word coming in from Titan.